Good morning, Joe. Ask Joe about money. It is March 2nd, 2023. Market just opened and we are gapping down. And I've already went in and put in our markers that we put in every single day. So way up here is the open of the week. So as we're getting closer towards the close of the week, this is important because it looks like we're going to be closing as a negative week so far. And we have in here yesterday's high as the thicker green line, the overnight high of the overnight session, yesterday's close, which was up here, yesterday's low, and today's open. So we're gapping down, okay? How many points? 57 to 34. So that's about 24 points, 23 points. So we're gapping down far from the moving average. So the first thing is that what I'm going to be looking for is a potential short if we see some bear bars. It's going to be a little bit harder for me to go with the bull case. And again, like we talk about every single morning, is because of the context, right? If we look at the bigger picture, this is what's been happening. We've been selling, right? And let's go back and look at the longer time frame chart, the 15-minute chart. So what's been happening here over the last couple of days, this was Friday, Monday, Tuesday, and then Wednesday. We're in this continued downtrend here. We found support here last Friday, below support. We broke below support. We came back up, and then every time it moves up, we sell. It moves up, we sell. Moves up, we sell. Moves up, we sell. So now if it moves up again, what do you think I'm thinking? Now, that's not predictive. I'm just saying that is what is happening. And the market tends to have inertia. The market tends to, 80% of the time, keep doing exactly what it's been doing in terms of this is what the sellers are taking every buying opportunity to sell. Now, is that going to be like that forever? Of course not. Is that going to change at some point? Yes, it will. Is the open today going to be it? I don't know. I'm open for it if it is, because trends are always looking to reverse. So is this going to be the time that it reverses up? I hope so, because if it does, we're going to make some money. But if it doesn't, we could also make some money. We're just going to watch. We're going to be patient like we are every single morning. And there's something, little lesson that I want to do as we wait for the open here. We're waiting for the first bar to close. So far, looks like there are buyers, okay? So far, there are buyers. But again, doesn't mean anything is because we have a huge resistance. So unless we see a big green bar, we're not gonna start taking trades just because we see a little bit of green. So far, green bar already. Just by virtue of that first bar, the bearish case right now for this point in time doesn't look great. But what if they put a big red bar in? Then that will change things. But right now, we're here. What I want to kind of show is like how I manage my trades. And yesterday, this is where I can't go into details, but this is what I call the geometry of the trade. And what I mean by this is every time that I take a trade, what I'm looking at, this is my risk, right? So the red box is my risk. When it's a winning trade, I markate the green as my profit, and then the orange is what I give back. So in other words, this was the entire maximal favorable excursion. It went as far as if I would have gotten out at the bottom tick. So as long as this geometry looks reasonable, and what I mean by reasonable is that if I'm taking away about 2/3 of the move, so this was my risk box, and I took away clearly more than 2/3, this to me was a good trade. Now up here, resistance, you see the red boxes, these are my losses. So this was a loss, this was a small loss, this was a small loss. And so when we come to resistance, I'll take a couple of stabs at it because the market could do exactly what it did here. It tried to go up and I got out, and it tried to go up and I got out. But then I took it again, and then with this risk box, with this trade here, this was my reward, this is what I gave back. This risk box here, this was my reward, I should say that was my profit. The green box is the profit, and the orange is what I gave back. So the reason why I look at this is because I want to always make sure that my risk was like to see what am I getting in terms of R. So if this was my risk, this was roughly, that's 1 R. So under 2 R, but maybe 1.7 R, something like that. Again, this is not perfect. This but this is more of an art than it is a science. Here, okay, that was about a 1 R. Here, this was about a 2 R, just looking at it. And then I look at how much did I give with that. All right, so far, green bar, red bar. This kind of was what happened yesterday morning, where we had green bar, red bar, green bar, red bar, and then we sold off. We're not going to predict. I'm just noticing that at this point we are in a range, at least for this. So the opening range, let's markate the opening range. That's the opening high, and this is the opening low. So let's see what happens here. Check to see if we have any news today. It doesn't look like we have any news, any U.S. news for the market. So let's see how this bar closes here. At this point, a red bar closing at its lows would get me interested in a short, because we tried up, we failed. We tried down, we failed so far. But if we close below the low, it's a big, decent sized red bar. I would be interested in getting short with a stop above the high. But let's see what happens. So our range is right now 39.31 up to 39.25. We're right on the open. We have the overnight low below us. We have yesterday's low above us. So this is yesterday's low. So this could be a good candidate for a trending day down because of the context. We kept failing up top. We kept failing up top. And now we broke decisively through support from Friday. And so it's going to take a lot of effort. Okay, so now we have another bear bar. But again, that's pretty much a doji. We did make a higher low. So we're going to keep watching. If I see a big green bar, I could easily shift my mindset to long, because there's also a lot of room to the upside. Just to test yesterday's high, we're up here at 39.74. But let's see what happens. All right, here we are. We're 4 bars in. The 4th bar is about to close here. Let's just really zoom in today's price action. So what are we seeing so far? Bull bar, bear bar, small bear bar, and bull bar. This is just consolidating at the low, right? Now the moving average is coming down. So if they go up, we're going to have to see how it reacts at the moving average. And the short, in my opinion, is easy, is because if they go ahead and, not that it's easy, no trade is easy. What I should say is my decision making would be easy, because what my thought process at this point is that if it's not going to go higher, and we have support here, and we have higher lows, but what if they put in a big red bar and it closes below all of this, right? Now, to me, that's going to be a short, and my stop's going to be above the high up here. On the opposite side, okay, if we go ahead and put in, because I'm going to need some type of big bar either way in order for me to get excited about those. And it looks like they're buying it at this point. But because now on this, on the upside, if they put in a bull bar, I would consider buying a retracement, maybe like a 50% retracement or something. But we're going to see what happens. For now, we're still in. We broke out of this opening range here, and we broke out of it at 9.55. But it doesn't mean that it can't reverse back down. So I'm not going to go ahead and just start buying just because I see some green. We have a ton of resistance. But right now, this is not surprising that we're selling here. This is yesterday's low, right? So it's not a short because we're at yesterday's low. What I'm looking at is, how is it going to react to yesterday's low? Is it going to, what if the buyers step in and they put in a big green bar? All right, now we're starting to build the bullish case, if that happens. And then how is it going to react at all of this resistance down here? That's going to be also correspond with the moving average. So far, they're trying to find buyers here, because again, the market, as we know, is an auction process, and we're constantly looking to see where are the buyers, where are the sellers. So the market's probing. Now, is this going to fail? I don't know. Is this going to go up? I don't know, but we're going to watch. Okay, so here we are, 9:52, and we're watching and we're waiting. All right, so here we are at 10 o'clock. So bull bar, bear bar, bull bar, bear bar, bull bar. This to me, not necessarily trading range behavior, and that looks like we're breaking out above this bear bar. But a lot of support up here, so we are making higher lows. But again, for me to get interested in a long, I would have to see a big green bar, and this might be it. But we have to see continued buying at this point. Continued buying. Here we are. That's the market open. Okay, we're at 10 o'clock right now. What I know is that it wasn't a trend right from the open. Can this be a trend or to the upside? Sure. Can we reverse? So we're going to really be watching price action in this area. There's a lot of resistance. We're always looking for at the inflection points, which we're at one right now. Yesterday's low, we're poking above it, but not with any enthusiasm. So there's a lot of resistance here. But again, if we start getting buying, this could become a short covering rally, and this could become a good opportunity to the upside. So over the next 15 to 30 minutes, we're going to be looking at what is the reaction up here, and do we initiate longs or do we initiate shorts? And it all depends on what they're going to do here in the next, I would say between like 46.50 all the way up to 60 in the next 10 to 15 points. What's going to happen here? With that, trade and manage your risk.